To cope with this, central banks across the globe have boosted their efforts to educate. Increase financial literacy, outreach and dissemination capacities. While trying to deal with the growing challenges related to fake news and negative campaigns. I would like to draw your attention to some recent, new tools. First, an ECB educational product called Visitor Center to Go that briefs in plain language the institution's key messages and knowledge in an easy-to-carry format, a suitcase. With inflation tamed in the single-digit zone and the Romanian leu fully convertible. The National Bank of Romania's increased transparency helped to boost the positive perception, strengthening our reputation. Of the trust gap should not crush the contribution of independent central banks to the efforts to avert crises. Achieve economic progress and be an open and responsible institution in the society. What's up, and down, with households? Lucy Ellis, Assistant Governor, Economic, Address to Housing Industry Association, March Industry Outlook. Breakfast Sydney, March 26, 2019. Thank you to the organizers of this breakfast event for the opportunity to speak with you and share with you some of our thinking about current economic developments. Some industries are doing better than others. But overall the strength in employment has been across a diverse range of sectors. Graph 2. One can be reasonably confident in the steer the labor market data are giving us. Because it is coming from multiple, independently collected data sets. Household consumption spending is slowing in contrast to the positive picture implied by the labor market. Growth in household income has been slow, and growth in consumption has weakened recently, Graph 4. If we drill down to see which kinds of spending have slowed the most, we can see that spending on cars and household goods has been particularly affected, Graph 5. Some recent work by colleagues at the bank suggests that the link is a bit more subtle. Than simply that increases in wealth boost spending directly, May, Notary, and Rees 2019. But there might be limits to how long households can continue. Expanding their consumption faster than their income is rising. Bonds and benchmarks. Christopher Kent, Assistant Governor, Financial Markets, Konganus DCM Summit. Sydney, March 19, 2019. Introduction. It's wonderful to be back at the Debt Capital Markets Summit. In the second half of my presentation, I want to address the risks relating to interest rate benchmarks. Issuance of bank bonds was quite high in 2018 in net terms. In addition to strong net issuance, over the past year the banks have been issuing a larger share of their bonds domestically, Graph 4. Often the perception of the domestic market is that it has limited capacity to absorb sizable increases in issuance. This raises the question of who was buying this domestically issued paper? Comprehensive data, from the financial accounts, show that the domestic issuance over the year to September 2018 was widely held across different sectors. Non-financial corporations over 2018, non-financial corporation spreads followed those of financial corporations. And by extension, spreads in global markets, Graph 7. Despite 2018 being somewhat quiet, a diverse range of corporations have issued bonds. RMBS in 2018, non-banks issued the second largest amount of RMBS since the GFC. Only narrowly eclipsed by 2017 issuance, Graph 10. The noticeable rise in the share of new mortgages extended by non-banks over recent years reflects in part, earlier regulatory actions limiting the growth of banks' investor and interest-only mortgages. In summary, over the past year or so, well-rated corporations, both in and outside of the financial sector, have been able to source funding in bond markets. Bill market is considerably larger as a share of the Australian major banks. Balance sheets than equivalent markets in the US and Europe, Graph 13. Around a year ago, a new methodology was put in place for BBSW. Strengthening contractual fallbacks for BBSW. While BBSW is a robust benchmark, we shouldn't take this for granted. If BBSW were ever to cease, the existing fallback provisions in many contracts would be cumbersome to apply and could generate significant market disruption. To hold an equivalent amount of high-quality liquid assets, given these issues, users of one-month BBSW should be preparing to use alternative benchmarks. RBA and calculated directly from transactions in the interbank overnight cash market.